Hey, welcome back everyone. This is Uncle Frank, and I am not a financial advisor, nor is any of the content to be construed as financial advice. This channel is for entertainment purposes only. Let's kick it off with my favorite article from Tuesday morning in a rare stumble. Citadel loses money in May as peers gain. Here's how hedge funds performed last month. Ken Griffin's $63 billion Citadel lost 0.8% in May, several people told Business Insider. The firm's rivals were nearly all positive last month. The Miami-based hedge fund, crowned by LCH Investments as the most profitable hedge fund of all time, lost 0.8% last month in its flagship Wellington fund. The loss brought its 2024 returns to 7%, through the end of May. By comparison, the S&P 500 is up more than 11% this year, thanks to a nearly 5% surge in May on the back of mega cap stocks like Nvidia. So we could have just bought an index fund and blew Kenny out of the water. If you go read the article, you could see Kenny fucking up while all his buddies are posting positive returns in May. Every advantage in the world, the finest minds, lightning fast executions, access to more information before anyone else gets it. If you start losing on a trade, naked short more. If you get caught, pay a small fine and resume cheating. Every advantage known to man, and this goof screws the pooch. It's your ego, Kenny. It's your greed. You deserve much worse, and I pray it's coming. From Bloomberg, June 3rd, short sellers in danger of extinction after crushing stock gains. The business of betting on stock declines is shrinking as bearish investors face threats on all sides. Jim Chanos quit after failing to raise capital. Carson Block's firm launched its first long-only fund. Andrew Left dubbed his kind a dying breed. These are bad times to be a bear on Wall Street. Short sellers are confronting enormous pressures in the face of a historic equity rally, regulatory pressures, and retail traders squeezing stocks like GameStop. Now, many are throwing in the towel rather than continuing to fight the tape as they struggle to raise outside capital. Yeah, my ass bleeds for you guys. Fed overnight reverse repo take-up drops to lowest since April. Financial firms on Monday submitted the fewest funds to the Fed Reserve's overnight reverse repo facility since April. Data from the Fed Reserve Bank of New York showed firms submitted $387 billion to the facility, the lowest since April 16th. From just 10 hours ago, U.S. banking sector teeters. $517 billion in unrealized losses, 63 troubled institutions flagged. Despite the claimed resilience in the banking sector by the U.S. Fed Reserve and the Biden administration, the specter of significant financial strain looms large. Unrealized losses on securities swell by $39 billion from the previous quarter, driven predominantly by depreciations in residential mortgage-backed securities due to rising mortgage rates. The latest FDIC report highlights that this marks the 9th consecutive quarter of substantial unrealized losses, a troubling trend that began with the Fed Reserve's interest rate hikes in early 2022. Simultaneously, the number of banks on the FDIC's problem bank list has escalated from 52 to 63 in just one quarter. By the way, this doesn't include securities sold yet not purchased. Now let's check in with the prime brokers. Hedge funds ditch shares as bullish bets hurt performance, says Morgan Stanley. Global hedge funds dumped equities last week in a painful week for their portfolios as the U.S. main indexes fell and hit their long bets, Morgan Stanley said in a note. The bank described last week as ultimately one of the more challenging we have seen in recent months for the average LS fund or long-short fund, based on what they saw in their clients' portfolio. The pain was mostly concentrated on the fund's long positions or bets that certain stocks will rise. As one of the world's biggest prime brokerages, Morgan Stanley is able to track trends in equities flows and performances. Prime brokers provide services to hedge funds, such as leverage and trading. Speak of the devil, Bill Wang looks to add Morgan Stanley probe to Archegos trial defense. Lawyers for the man behind the disgraced family office want to question the SEC on block trading leaks at the New York-based firm. And from Bloomberg, hedge funds sell software stocks as AI splits tech, Goldman says. Hedge funds are unloading software stocks as concerns mount about who will be left behind in the artificial intelligence boom. Last week, funds sold information technology shares by the most in 11 weeks, with software accounting for more than 60% of it, according to Goldman Sachs Group's prime brokerage desk report for the week ended May 31st. Hedge funds' net exposure to software is now the lowest it's been in more than 5 years. Guys, I track their activity all over the world for you. From Fortune, hedge funds are paying for literally insane shorting of UK stocks as takeovers revive London valuations. According to information obtained by the Financial Times, some of the world's biggest hedge funds have been caught off guard by sudden valuation increases in British stocks they bet would fail. Ripple CEO, we are ready for the IPO, but only if Biden removes current SEC chair Gary Gensler. The CEO of Ripple Labs, Brad Garlinghouse, says the company is now ready for an initial public offering launch. However, the company insists on removing Gary Gensler as chairman of the SEC for that to happen. The CEO's comments are in response to reports of President Joe Biden's outreach toward crypto businesses in its ongoing election campaign. While this move reflects a shift from the president's early stance against crypto, Garlinghouse believes Gensler's resignation is pivotal to crypto's future development. Quote, if the Biden administration is actually serious about a shift and finally walking up to the crypto electorate, the single most important thing they can do is demand the resignation of Gary Gensler, Garlinghouse stated in a recent post on Twitter. The XRP community appears to be in sync with Garlinghouse regarding Gensler's removal as SEC chairman. One community member commented, "This dude Gensler has hurt many XRP holders. While Ethereum and Bitcoin got their bull run, XRP had been stagnant for 6 years, although they are the most transparent." I feel you, dude. Okay, let's get ready for the open with the year-to-dates and headlines from yesterday. Then we'll do the events calendar. Before the bell, S&P 500, 5291, up 11.6% year-to-date. Dow, 38,711, up 2.6%. NASDAQ, 16,857, up 14.2%, leading the indexes for the year. Russell 2000, the small caps, 2033.94, up only 1.1%. Bitcoin yesterday, 70,337, up 60.9 for the year. Ethereum, 3804, up 62.5. Gold yesterday, 2346.70, that's 13.3% year to date. Oil stands at 73.32 as of yesterday, 2.2%, and the 10-year Treasury finished at 4.33. Headline roundup, BlackRock and Citadel Securities-backed group plan new national stock exchange in Texas. Short sellers in danger of extinction after crushing stock gains. Global central banks plan to increase dollar reserves. U.S. job openings fell to a 3-year low. Chinese move billions to Hong Kong banks seeking higher yields. That means they're selling treasuries, higher yields ahead. Larry Summers sees higher U.S. long-term rates over time. E-Trade is considering banning meme stock trader Roaring Kitty. Musk redirected NVIDIA chip orders meant for Tesla to X. Tesla will likely spend $4 billion on NVIDIA chips this year. And there it is, the events calendar, Wednesday, June 5th, 8:15 a.m. Eastern Time, ADP employment figures. 9:45, S&P Flash PMI. 4:15, we've got a CAT event, Industry Testing Checkpoint Zoom call. And you could go listen in if you want to. Today, of course, AMC annual shareholder meeting and vote. Guys, I feel like the fix is in on the vote. In my opinion, Adam rigged the last shareholder vote, and he'll do the same with this one. That's why I rely on swans to deliver me from this mess more than the fat pervert money-grubbing CEO we have. He's been swapping stock for debt at record low prices this year like wild, and I guarantee whomever is getting the stock will vote the way they're told. Their shares may be unregistered, but I'll bet they've got voting rights. And that's why when we asked our investor relations guy, John Merriweather, whom we're swapping stock for debt with, he declined to answer, even though he works for us and we pay him, right? All right, tomorrow, Thursday, June 6th, 8:30 a.m., initial jobless claims. We'll also get a look at the European Central Bank rate decision, and the NVIDIA split process begins. What's going to happen there? The split will affect any shareholders of NVIDIA common stock as of market close on Thursday, June 6th, with investors receiving 9 additional shares after the market close on Friday, June 7th. And speaking of Friday, 8:30, U.S. employment report. That's the big one. U.S. unemployment rate. Also Friday, SPPP should be on the NYSE threshold list for 13 days. We'll see. Bad Boys Ride or Die gets released at our theaters. Tuesday, June 11th, the FOMC meeting begins. So you've got that on June 11th and 12th. According to NASDAQ, GME is expected to report earnings after the close on Tuesday, June 11th. The report will be for the fiscal quarter ending April of 2024. Wednesday, June 12th, it doesn't let up. 8:30 a.m., CPI, Consumer Price Index. Then at 2 p.m. in the afternoon, minutes of the Fed's May FOMC meeting. Thursday, June 13th, 8:30, Producer Price Index. That's also the day Roaring Kitty's options expire. We've got a lot of landmines for the hedgies to step on. Stay tuned. Hey, I want to thank you for watching, and please remember to hit the like button after this slide if you enjoyed the presentation. Subscribe to the channel and set the alert so you're notified when I have new information to share. See you at the bell.